Donald Trump has once again decided to spread fear across the markets. And yes, as you saw, Bitcoin and the entire crypto market corrected a few hours ago. He's threatening to acquire Greenland, and he's threatening to impose new tariffs on Europe in a few days. We're going to talk about it today because we might possibly be on the verge of a new trade war that could break out between the United States and Europe. But before I tell you about these important events, there's another very important event this Thursday at 9:30 p.m. Mark it in your calendar because in less than 72 hours, my team and I will be hosting one of the most important live events of 2026. It will take place within the club. And like every Thursday, I'll be live with the members. And during this exceptional live session, I'll be talking about first, the strategic shift I've decided to make. I'll also talk about my overall strategy to adopt now, my allocation between Bitcoin, Ethereum, and especially altcoins, as well as my entire detailed strategy for altcoins for today and for the coming weeks. So I'll also be giving tips on how to avoid the classic market traps, especially since there are so many right now. And we'll also cover macro and geopolitical analysis, and specifically how not to be affected by the market today, especially when it comes to your portfolio. And of course, there will also be an open Q&A session where members can ask me any questions they have. So, if you want to attend this exceptional live session this Thursday at 9 p.m., comment now with the words Live Club along with your motivation. And above all, submit your application now using the link available in the pinned comment and also in the description. So, see you on Thursday. And now, let's talk about the sharp move that caught quite a few investors off guard last night. Because what happened is that as soon as the US futures opened, Bitcoin went into the red because of the growing tensions between the United States on one side and the European Union. And the crypto market reacted instantly because Bitcoin, as you saw, dropped by $3,600 in a single straight line, which triggered a wave of liquidations that swept away more than $546 million in long positions. And last night, in just 90 minutes, nearly $130 billion evaporated from the entire market, crypto. And what makes this episode even more significant is that Bitcoin failed to secure its weekly close above $94,000. I mentioned it to you in the daily updates last week, but it was a key level we had discussed in recent days and represented a psychological threshold to maintain. Absolutely essential to maintain a proper upward momentum. So here there is no structural break, at least for now, but we've had a sharp and important reminder of what a market that's extremely sensitive to the macro context can do in just a few minutes. We witnessed it firsthand. And we'll also see that gold and silver shot up directly after that. Let's continue with an announcement that has literally accelerated the geopolitical escalation. Donald Trump has just announced a new series of tariffs, but this time with a completely open objective, namely to put pressure in order to buy Greenland. And here, this is no longer traditional trade policy at all, because tariffs are becoming a tool for direct geopolitical negotiation. And starting February 1st, he simply announced a 10% tax that will hit several European countries: Denmark, Norway, Sweden, France, Germany, the United Kingdom, the Netherlands, and Finland. And if no agreement is reached by June 1st, these tariffs will rise to 25% and will remain in place until a deal is made. So for the markets, this kind of announcement, like more tariffs again, in April 2025, it can't be ignored. Especially since history shows that trade tensions work like a switch. That is to say, everything is fine until suddenly it all goes off the rails. And this new episode reminds us that geopolitics has once again become a major factor in the pricing of risky assets, like the crypto sector. And in an environment where uncertainty is rising, volatility can come back very, very quickly. He will also give a speech on Wednesday. I'll also talk to you about it in the daily updates. And we're still caught in this spiral of tension, but this time on the European side because they've decided to respond. Because the EU is preparing a countermeasure that could go as far as $100 billion in tariffs and restrictions that could directly target American companies. This time, so it's a real economic counterattack. And as always with trade wars, the first asset to be affected is risk. And Bitcoin can falter at first, as we saw last night. Because this kind of announcement systematically, even instantly, leads to a withdrawal of liquidity and an increase in volatility. We saw it with Bitcoin and also with gold. Bitcoin corrected and gold shot up immediately. So the two are closely linked, but the danger isn't the announcement itself. It's what happens if the escalation drags on, because when trade tensions persist, they always end up weighing on currencies, growth prospects, and especially on overall investor confidence, which starts to erode. It comes back little by little, and for now, the markets remain fairly calm. Today is Martin Luther King Day, so the markets are closed, but we have $100 billion in threats here, and that's a level that changes behaviors. And every change in behavior always ends up being reflected sooner or later in Bitcoin's price action. And it also seems that we're going even further with this story, because after Donald Trump's shocking announcement about tariffs related to Greenland, Emmanuel Macron has just asked the European Union to activate its commercial weapon, the most powerful one, which is the anti-coercion measure. So in simple terms, what is it? It's the EU's economic self-defense mechanism. That is to say, it allows, and could possibly allow, if implemented, Europe to respond to foreign pressure. And here, as you've understood, it's pressure from the United States. And this would mean directly targeting the opposing economy until the coercion, the pressure also stops. And if this weapon were directed against the United States, the consequences would be, and potentially are, major. So what could this potentially imply? It means that American companies could have restricted access to the European market. There could also be targeted actions against US banks. There could also be measures taken against American big data companies. So all of this makes the situation even more explosive. What makes the situation even more explosive is that this instrument has never been used in the entire history of the European Union. If Europe presses this single button, we will shift into a real trade war, and this time it will be structured. Obviously, this kind of climate directly affects risk markets. The more tensions rise, the more investors look to reduce their exposure, which can weigh on active markets, stocks, and trigger volatility on the crypto side. And as you know, with every episode of geopolitical uncertainty, we see the same classic scenario play out again. Precious metals take off like a rocket. We saw it instantly when Bitcoin corrected. And with rising tensions between the United States and Europe over the Greenland issue, gold and silver reacted immediately and set new all-time highs. And this surge is a perfect example of a risk-off movement, meaning that investors reduce their exposure to risky assets like stocks or crypto and normally and naturally seek refuge in what they consider safe havens. And while Bitcoin and the stock markets were correcting, metals were the first to absorb the demand for protection. And at the market opening today, gold reached $4,690 and silver hit $94. So this is a very typical reaction in a context of trade tensions, and that's on a global level. It's also a context of growing uncertainty, where capital flows are instantly redirected toward assets considered this time defensive. And is it? At least that's the question I'm asking myself, and maybe it's the question we all need to ask. Is Donald Trump's influence really going to continue? Will it continue to impact the markets as strongly as we saw in 2025? For some players in the industry, at least, the answer is clearly no. Because according to Yat Siu, who is the co-founder of Animoca Brands, the Trump crypto moment is already over. He explains, and this is interesting, that the market bet far too much on the political aspects. Last year, in 2025, the entire narrative was based on the idea that 2025 would be Trump's year, the year of his inauguration. So he was supposed to arrive in January 2025, let me remind you, and this was supposed to boost the sector and the crypto sector specifically thanks to his pro-crypto stances. But in reality, what actually happened, all this excitement around announcements, speeches, interest rates, or even sanctions never really produced the expected results on prices. And according to him, there was a major mistake made by the market, which was to behave as if crypto was the main priority on the political agenda. Let me know if you agree with him, but the end result is that many traders got caught up in moves driven by media noise rather than fundamentals. And this is where his analysis becomes interesting for 2026, because he claims that this new year will no longer be about political narratives. Instead, it will be a year of real utility where regulatory compliance will be possible, and we could also see gradual entries from institutions, moving towards concrete products this time around. So, in other words, the market now wants proof. It wants use cases, it wants real flows, and it doesn't want promises. And if 2025 was dominated by politics, then 2026, yes, could be dominated by building. And that is a major paradigm shift that could completely change the way crypto evolves in the coming months. And importantly, while the markets are trying to digest all this geopolitical volatility, there's also a whole new context forming on the on-chain flow side, and I wanted to talk to you about it. Because according to data from Crypto Quantity, the largest Bitcoin holders are clearly starting to ease off. So we have whales, and this is an indicator I watch closely. We have the largest whales becoming much more cautious, while now it's the so-called intermediate holders who are driving most of the activity on Binance specifically. And this kind of behavior, this change in behavior, is actually typical of periods of uncertainty, because we have very large wallets that prefer to wait for the dust to settle before making any significant moves again. And I think that's pretty smart. On the other hand, we also have what we call mid-size holders, so intermediate holders or investors who often take advantage of these fluctuations to adjust their positions. So it's not necessarily bearish in itself, but it does confirm that the whales are currently in observation mode as long as the political and macro situation hasn't stabilized. They might potentially come back later as soon as they have confirmation triggers. In short, it was really important and really interesting to talk about what's happening today in terms of macro and geopolitics. What's going on? What is also threatening the markets today? I wanted to talk to you about it, so feel free to let me know what you think in the comments. I'll leave you now with the video that tells you a bit more about the club, which I mentioned earlier. As an introduction to the special live session this Thursday at 9 p.m, maybe it's a bit abstract, maybe it's unclear what's actually in the club. I'll leave you here with this 30-minute video that explains everything from A to Z. What happens in the club? What do we do? How do we change mindsets? How do we change portfolios? How do we change the way we see investing? With my whole team, because I'm not doing this alone. And if you're interested in this special live session, which is super important, you can apply now. And I'll see you tomorrow for a new video. Until then, take care. This was Julian. Ciao.